Good morning and good afternoon, and welcome to the December 2023 WASDE webinar. My name is Andy Miller with DTN. I'll be your moderator today, and with me as always is Todd Hultman, lead market analyst for DTN. A couple of quick housekeeping items. All participants will be in listen-only mode. You may ask questions at any time during this event, and to do that, click on the chat icon located in the bottom right of your screen. Type in your question, and we will address those at the end of the webinar after Todd shares his report. Also, this event is being recorded, and a rebroadcast link will be on the DTN website within 2 business days. And reminder, our web address is simply dtn.com. And I think that sets us up. Todd, I will turn it over to you.
Thank you, Andy. Hello, everybody, and thanks for joining us for today's WASDE webinar. One of the things that's going to be unusual about this December report is that it's the first time since May where we don't have new production estimates for corn or wheat or soybeans. So it tends to be a simple report here in December. I don't know if you recall, but last year when we did the December report, as far as the U.S. estimates go, USDA just had one change for corn exports, and they left soybean and wheat alone. Well, we're very close to that today, but we actually had a couple changes in the export estimates for corn and wheat. And as you'll see, they left the soybean numbers alone. So let's go ahead and proceed and see what USDA offered today in the case of corn. This is the U.S. balance sheet for the supply and demand estimates of U.S. corn. And as you can see, there's not a lot of new here. The rectangle in the lower right corner shows that ending stock estimate has been lowered. Instead of 2.16 billion bushels, we're looking at 2.13 billion bushels. And there was one explanation, and that is that USDA raised the corn export estimate by 25 million bushels. It's now at 2.1 billion bushels for the year. So we continue to see a nice string of export activity for corn, much better than a year ago, thankfully. And in fact, we'll get to the numbers for that here in a little bit, but we're on a much better pace than we were a year ago, and presently it helps and continues to help that our U.S. corn prices are cheaper than those of Brazil. So we're doing better on the competition aspect for those export sales at the moment. I'll also mention that in this morning's news, we received another flash sale announcement from USDA, and it showed 6.5 million bushels of corn sold to unknown destinations. So again, our export activity for corn continues to trickle in at a fairly good pace. No other estimates on the U.S. Corn estimate table was changed today. So let's go ahead and move on and see what USDA said for the world estimates. The upper right corner shows the new ending stocks estimate for world corn. It's increased slightly. Instead of just under 315 million metric tons, we're now at 315.2. And likewise for the ending stocks where we exclude China, which I think is an important metric, the ending stocks estimate there also increased slightly up to 113.2 million metric tons. So just a very small change in today's world numbers. Looking at the production column, the numbers for South American crop estimates, you can see stayed the same this time around for both Argentina and Brazil. That surprises me a little bit. And one of the interesting thing about USDA's corn estimate for Brazil's production this year is that here we are sitting at 129 million metric tons, but Brazil's crop agency, CONAB, has their corn estimate down at 118.5. So we have basically about a 10 million metric ton disagreement at the moment, and it'll be interesting to see how that plays out in the months ahead. We did see a slight increase in the estimate for Russia's corn estimate. Instead of 16, it's now up to 17, and another increase in the corn estimate for Ukraine, up to 30.5 million metric tons. It continues to be somewhat amazing to see Ukraine able to grow the amount of corn that it has in spite of all the wartime situation going on. Likewise, in Ukraine, USDA also increased their export estimate from 20 to 21 million metric tons. Now, that's still down a year from a year ago, and really since the Black Sea deal expired in July, the corn export activity out of Ukraine has been down by almost a half. So it's a little surprising to me to see this bump up in the export estimate for Ukraine, but that's where USDA has it today. Let me just check one thing, make sure I'm not missing anything. I think that pretty much covers it for the world corn numbers here. So what else do we see about corn? Well, here's the chart giving us the historical perspective of USDA's ending corn stock estimates going back to 2010. And as I said, it's important to exclude China. You know, China has an ending stocks, or USDA has an ending stocks estimate of 7.95 billion bushels for China, and that just seems very difficult to defend, given China's need for corn exports. Even after having big production this year, it just seems highly unlikely, or corn imports, sorry, it just seems highly unlikely that they have almost 8 billion bushels of ending stocks in the country. So this is the metric I like to look at when it comes to assessing world stocks. And we see that the current estimate of 4.46 billion bushels, which is again excluding China, is the most corn supply that we've seen in 6 years. So domestically, we have higher ending supplies of corn here in the US and worldwide as well. It looks like much more corn is going to be available this year. The US corn basis at this time, we're taking our national corn cash corn average index, $4.54 last night. We're taking that off of the March futures contract, and the current basis, nationally speaking, is 34 cents below the March futures contract as of last night. So I'm comparing that here to years which also had roughly 2 billion bushels of ending stocks, and that's the period 2014 to 2019. And we see that the current basis is basically right in line with where it normally is when we have ending stocks near 2 billion bushels. But the other interesting thing I think about this comparison to previous years is that it shows that seasonally speaking, we tend to usually see a nice improvement in the basis levels from the October lows when harvest is having its most profound effect on prices. And then once we typically get back to January, uh, then the basis tends to start leveling out. Now, sometimes we can see improvement in January, but oftentimes January is fairly flat performance as far as the basis goes. So we seem to be right in the kind of normal expectations for where we would expect basis to be in this supply situation that USDA is estimating. The corn exports we've seen, as I mentioned, are up, and they're actually up 30% from a year ago in the latest report. And these are the actual export shipments, by the way, not the sales. So we're still early in the season. Shipments for corn typically start picking up in the month of February. So we're still kind of slowly increasing our shipment activity. Of course, a couple hurdles we have are the low water levels on the Mississippi River. So far, thankfully, knock on wood, that has not been a significant slowdown in activity of shipping corn. And part of that is helped that a lot of our sales, almost half of our sales, have been to Mexico. So thankfully, we're not as reliant on the Mississippi River for that. And the other possible hurdle coming up here the next few months is going to be the traffic through the Panama Canal. And that's become increasingly problematic. They're slowing down the number of ships that can pass through. It's getting more expensive in terms of shipping the grain. through the canal, and some are saying it's going to be fairly prohibitive the next 3 months, most likely. So we have a possible problem ahead there when it comes to the Panama Canal. But so far, we're above a year ago's pace. We're still below the 4-year average, as you can see by the black line on the chart, the red line representing where our shipments are currently at. But once again, USDA, because of the good sales that we've received so far, increased that export estimate 25 million bushels here in Friday's report. As far as demand from the ethanol sector goes, we're still in very good shape. And in fact, just this week, we saw a very high indication of ethanol production for the most recent week. And this, I think, this chart explains why and why it's much more active this year so far. So the blue line at the top is the estimated corn processing value from USDA. And I took the state of Iowa as an example here. And in the most recent report, which comes out every Monday, USDA is saying when ethanol plants process a bushel of corn, they receive $6.82 worth of ethanol, distiller grains, and corn oil. And so obviously 682 is a fairly generous premium over the $4.30 that's being paid for cash corn nationally. So that's a nice wide margin, and the ethanol plants have plenty of incentive to keep processing more corn at their plants. So that's the good news. And of course, that's one of the aspects of dealing with $4 corn versus $6 corn like we had earlier this year. So at the moment, the ethanol demand for corn continues to be on a very stable basis. And so far, ethanol production in the new season is up 5% from where it was a year ago at this time. So that continues to be a good and important source of demand for our corn. Basically, here's the chart of March corn, and I just wanted to show the commercial and non-commercial positions at the moment because we tend to have a fairly extreme situation here. So in the latest report, and this will get updated later Friday afternoon, but the latest numbers that we have from the CFTC show that the specs are net short over 157,000 contracts in corn. That's a very heavy position. And when you get that one-sided, where commercials, on the other hand, are not net short, they're net long over 175,000 contracts of corn. That tells me that at these cheap prices, commercials are finding good value. But because corn has been trading lower, that the specs are enjoying the downhill ride. But as often happens when they get overdone and overbalanced in this market, there can be opportunities for short covering. And I think we've seen some of that the past week or so here, or at least in the month of December. It's still true that we're headed in the new season for greater corn supplies, and that's going to keep a lid most likely on corn prices. The one big moment of uncertainty still is how will Brazil's corn crop do? And of course, their larger safrinha crop isn't even going to be planted yet until late January or February. So we still have plenty of time, and it's very difficult to be too confident about any estimates for Brazil at the moment. Okay, let's take a look at soybeans. I think, as I mentioned, none of the soybean estimates changed today. The export estimate is still 1.755 billion bushels. The crush estimate is still the same. The ending stocks estimate is still 245 million bushels. You see in the little rectangle down there. And the average farm price is still expected at $12.90. So this is, again, the lowest ending stocks estimate for soybeans that we've seen in 8 years, if the number actually proves out in the year ahead. And because of that, U.S. soybean prices still have bullish potential. In my opinion, I actually think the average farm price this year will be closer to $13.50 than $12.90, but that's my view of things. The big concern, again, just how much soybeans will Brazil produce, and we'll get into USDA's estimates of that now. Here's the world supply and demand table for soybeans. In the upper right corner, you can see that the snapshot estimate of soybean stocks was reduced slightly from 114.5 down to 114.2 million metric tons. That's not much of a change, and that's nothing really to rattle the markets. Now, there were some interesting internal changes in today's report for soybeans. And the first one, well, let's look at the production column, the second column, and look at our South American crop estimates. You'll see that Argentina stayed the same at 48, but Brazil's estimate was reduced from 163 to 161, while Paraguay stayed the same at 10 million metric tons. Now, we all thought that USDA had good reason to lower Brazil's soybean crop estimate today. As you probably know, Brazil has dealt with a long stretch of hot and dry weather early in the soybean season. They finally started getting more consistent rains shortly after Thanksgiving, and we've seen a more consistent rain pattern recently here in December, but the rain amounts still aren't going to be up to their normal or average levels. Well, as John Brannick, our meteorologist, has often explained, Brazil doesn't need normal levels to still have a good soybean crop. They just need good coverage and they need consistent rain. So, normally the rainy season has maybe 6 to 10 inches of rain a month. They don't need that to still have a good crop. They can still have less than normal and have a good soybean crop. So, my best guess for the soybean crop right now, I'm thinking around 158, and not unusual for USDA. They seem to be a little cautious in coming down in their crop estimate. And fair enough, there still is plenty of time ahead to see how this crop turns out. The interesting thing about today's 2 million metric ton reduction in Brazil's crop estimate is that if we step back to a previous page, we would see that Brazil also increased its estimate of the soybean crop that Brazil harvested earlier this year by 2 million metric tons. So effectively, we have a push there. It seems a little unusual that USDA would come in this late and change its estimate on Brazil's soybean crop from earlier this year. But they did. And so the slight reduction that we saw today was offset by an earlier revision, is what I'm trying to get at. And the other thing that happened in today's report that we saw, came from China, and the import estimate for soybeans from China was increased from, instead of 100 million metric tons, now it's 102 million metric tons. So in our market comments, we've talked a lot about soybean demand from China staying very strong this year in spite of all the negative economic headlines that we've seen about China going through this year. And we continue to see strong signs of demand. And in fact, just this morning, we got another export sale, 5 million bushels soybeans to China announced at 8 o'clock this morning. So we continue to see active reports of business to China. Oh, I lost my map here, unfortunately. Sorry. Not sure what happened there, but basically I had our latest forecast of the 7-day forecast of weather in Brazil. And if we could have seen the map, we'd see fairly broad coverage of rain in central Brazil, which is where the big circle was, and heavier amounts still expected in southern Brazil. And that's been kind of the theme lately, or at least since Thanksgiving. We've had pretty consistent rains in central Brazil. So that's where the crop conditions have been improving more recently. But at the same time, we continue to have these heavy rain amounts in southern Brazil. And right now, the heavy rain is having two effects. Number one, it's most likely limiting Brazil's production of the first corn crop because they've just had huge amounts. John Brannick explained at our Ag Summit meeting earlier this week that southern Brazil has had on roughly about 100 inches of rain since September. So that's just a huge amount. Flooding's been a concern, and you can imagine the crop conditions are not great in that part of Brazil. Now, those rains are expected to continue, unfortunately, and so it's also adding to a late delay in the planting pace for some soybeans. And that's another reason our Brazil's soybean planting is behind last year's pace, is because of the excessively wet situation in southern Brazil. So these will be the issues moving forward that we'll continue to talk about in our market comments. Soybean basis here in the U.S. Has stabilized after falling rather dramatically earlier this summer. Last year's soybean basis level, shown here by the blue line, is maybe the best soybean basis conditions that we've seen in a long time, and it's certainly the best we've seen over the past 20 years. Now we're down to a more normal range of where that basis normally is. Our DTN soybean index was 12.55 a bushel last night. That's roughly 57 cents below the January contract, and just kind of falls roughly in line where that basis normally is this time of year. Now that surprises me a little bit that the basis is not doing better at this moment, because we do have tight ending supplies estimated for soybeans, but I think the fear or concern about Brazil having another big crop this year is really keeping traders a bit cautious in the soybean market at the moment. Here's our most recent update of actual soybean exports. And as of yesterday's report, we see that there's been 673 million bushels of soybeans shipped. That's down 13% from a year ago at this time and below the 4-year average. Keep in mind, however, that in the new season, we're competing with Brazil's record crop that they harvested earlier this year. A year ago, we were competing with a drought-restricted crop from Brazil. So it's not unusual for our exports in soybeans to be down 13% from last year's very strong push, where Brazil was limited by the amount of exports they could offer the world. So being down 13%, in my mind, still is not all that bad. And as I mentioned, we continue to see good activity from China. And once again, USDA kept its export estimate unchanged today at 1.755 billion bushels. Here are the crush numbers. Again, we always like to get a good read on what soybean processors are looking at when they make their decisions to buy or not buy soybeans. And this is a situation that still looks very enticing and profitable for soybean processors. That's the good news for crush demand as we head into the new season ahead. The blue line at the top is the amount that is grossed. And by the way, these are all based on the January futures prices. So if we crush 1 bushel of soybeans and get a certain amount of meal and a certain amount of bean oil, then that works out to $15.49 worth of soybean products that we get from a bushel of soybeans. Well, on the January contract, soybeans are going for $13.12. So there's a nice $2.37 premium there for processors to work with. And that continues to be a very generous, comfortable margin, better than anything they typically saw before 2021, before we had the increase of the renewable renewable diesel industry. And that's made a big difference, and it's given our soybean market prices a new market and source of demand that's helping soybeans stay profitable at this time. Here are the price chart of July soybeans, and I put July on here because this is going to reflect tighter supplies that we're expecting to have this summer. As you can see, just recently, starting in December, the July soybean price finally broke below the 100-day average, which is the blue line on this chart. And along with that downward break, we've seen a drop in the number of non-commercials or speculators that are long in the soybean market. So it's a bit surprising to me that we still have what I would call a well-supported market with encouraging fundamentals, that is low supplies here in the US. And we don't see much help in the market as far as specs being overly net long. It's a fairly modest position they have, just over 50,000 bushel or 50,000 contracts net long in the market. So to me, it's encouraging to see. I still think there's a lot of legitimate fundamental support for our soybean prices, and between soybeans and corn, I think you have a better chance of making money by storing soybeans in the next few months ahead, at least up until we find out more about Brazil's harvest this year. Okay, let's take a look at what USDA said for wheat today, and it's quite simple. There was just one change in the estimate. USDA increased the export estimate for wheat from 700 to 725 million bushels, and we can thank China for that, as we've seen a nice jump in activity and purchases from China just this week. We've seen almost 82 million bushels of soft red winter wheat sold to China. So that was a nice unexpected bit of business. For a long time, it was very difficult to find any business for wheat. And that doesn't mean all the wheat prices are going to be helped, but certainly the Chicago wheat price is getting a nice boost out of this uh, unexpected business. The ending stocks estimate for wheat was 684 million bushels last month. Now it's down to 659 with that increase in the export estimate. So we have a little better average farm price expected, $7.30. This is still a very, what I would say, depressed, low export market for the U.S. But as I say, it is nice to get that business from China this week. Among the classes of wheat, no surprise, the biggest change showed up in the soft red winter category. We see the new ending stocks estimate for SRW wheat falling from 148 to 118 million bushels. And again, that's due to the recent business to China. The only other wheat class that showed a change was the white wheat ending stocks were increased by 5 million bushels up to 66 million bushels. But white wheat is another category that tends to have good export business to Asia. Here's the world estimates, and this is where the main interest is in today's report for wheat. And if you look at the upper right corner, you can see that we just didn't show much change at all. It was just a slight reduction in USDA's estimate of world ending wheat stocks. Instead of 258.7 million metric tons, we're now down to 258.2 million metric tons. If you look across the top line, you'll see that the overall production estimate was increased by roughly, basically 1 million metric tons. If we go down the production column, we see that the crop estimate for Australia was increased up to 25.5 million metric tons. I believe that goes along with the estimate from Australia's government, ABARES, who also recently increased its crop estimate. And the estimate for Canada's crop also went up to 31.95 million metric tons, which matches the number that we got from Statistics Canada earlier this week on Monday. The other production estimate that's not shown on this chart, we would have to go lower down. There was a 1 million metric ton reduction for Brazil. So at the end of the day, just a 1 million metric ton increase in the overall production estimate. And then when we look at USDA's overall demand estimate for wheat, we see almost a 2 million metric ton increase in the estimate of wheat demand. So again, we're staying very close to where we were a month ago. Not a big change, but it is interesting to see that there was a little pickup in the demand estimate this time around. World wheat supplies, again, this metric excludes China. We can never be too certain about the truthfulness of China's numbers, and China's not a big exporter of wheat anyway. They definitely have become a buyer, but they're not a major exporter. So it seems safe to exclude them from the world assessment. And USDA's most recent world assessment is that there's 124.3 million metric tons, or 4.57 billion bushels of ending wheat stocks in the 23 to 24 season. This continues to be the lowest estimate in 15 years. Now, again, we might all expect from this chart that wheat prices would be much higher than they are, but that just simply hasn't been the case as Russia continues to overwhelm the world with a dominant amount of wheat exports that are keeping prices very low. Here in the US, we can see some of the hit to demand that we've taken in HRW wheat this year. The basis at the present time is currently 60 cents under the March contract based on our HRW wheat index. And as you can see from the blue line, that's much weaker than it was just a year ago when things were looking tighter and prices were a little better for wheat. Right now, this basis, as of yesterday, is tied with the second weakest basis performances of the past 10 years. And again, it reflects the poor demand that we've had for our wheat this year. The only good news spark here is the recent business from China, and certainly that should help. The March Kansas City wheat price up until the end of November was just in a downward spiral, but thanks to the new business from China, we've seen some short covering take place because the specs in the market had reached a very heavy uh, uh, level of being short in Kansas City wheat and even larger, more short in the Chicago wheat contracts. So thanks to the recent business from China, we've seen a bit of a short covering rally in wheat. It's pulled us up from the lowest prices. Kansas City wheat got just down to $5.95, just below the $6 mark for a very short time. But thankfully, we found a little better support since then. On the commercial side of the market, commercials have been loyally net long in wheat the past several months. And once again, just an indication that end users are finding attractive value at these lower prices. So at some point, that has to offer some support to the market. And certainly we got help from China this week. In conclusion, just wasn't really any big change in this report, to be honest. I'm calling it neutral across the board. In corn, we have a slightly lower ending stocks estimate now. Soybeans, we still have the lowest ending stocks estimated in 8 years. We both have ongoing weather concerns about what's going to happen in Brazil in early 2024 as far as their corn and soybean harvests. And then in the case of wheat, we still have a very similar situation that we had last month, and that is we still have ending stocks at the second lowest level in 10 years here in the US and the lowest world ending wheat stocks in 15 years when we exclude China. So we don't have, it's a little frustrating to say we don't have big supplies of excess wheat in the market, but it has continued to be a very bearish market largely because of Russia's dominance. The next WASDE report will be out January 12th. And where this was a rather quiet one with low expectations, there's going to be a lot of information in the January 12 report. We'll have the so-called final corn and soybean production estimates for the U.S. In 2023. We'll have the grain stocks estimates for December 1. And I think there's also a winter wheat seedings report. Yeah, we'll have winter wheat planting estimates on January 12th as well. So that'll be a busy day, a busy report, and a lot to look forward to. In the meantime, I know might have some questions for me, but I just want to say before I forget, hope everybody has a nice holiday, and we'll see you in the new year. So Andy, with that, what kind of questions do we have?
Yeah, first I'll apologize. We had some technical issues, but we gave some alternatives and we did get just one question in. Um, and the question is, do you know how much canola Ukraine and France produced?
No, if you email me, I can certainly find that out, but off of the top of my head, I sure don't. So sorry about that.
Yeah, and that is the only question, Todd, and I'm glad you put this slide right up. So for those
Yeah.
that tried to maybe enter a question or a comment and weren't able to get it through or because of technical issues, there's Todd's email, and Todd was gracious about responding to those questions. So yeah, that does conclude our event today. So I want to thank everyone for joining. And a reminder, this has been recorded. So if you missed some details and you want to go back and look, we will have this rebroadcast link up on DTN.com within the next 2 business days. And again, reach out to Todd if you have any additional questions. And that will do it. And I also wish everyone a happy holidays, and we look forward to seeing you on January 12th. Thanks,
Thanks
everyone.
all.